Okay, it started. So Naveen, you can see my screen. This is the document that I tried to create with all the points that we discussed last time. And if you see here, we have already discussed about few of the things. So maybe I will take some 5-10 minutes to just recap what we discussed previously. So we have discussed that we are waiting for a correction to happen in market, and mostly when that happen, we wanted to make ourselves ready so that we can put our bet on specific number of stocks, and we will then expect the bull run to start. And we were discussing like when the bull run can start. Maybe it can start in next 1 year, 6 month, or 3 year. So whenever that happen, we would like to stick with those number of stocks. And then we were also discussing how we're going to put our um, split on those stocks. Maybe we do not want to put a lot of stocks in our portfolio. We will thinking that we will make something like a list of 20, 15, or max 30. And that was something we were discussing also in detail. And after that, we do identify some of the use cases that is the practical use cases that may happen, like how much the global market can fall, how much the Indian market can go down, mostly Nifty or Bank Nifty, and what will be our strategy when to enter. And we were also discussing about few of the fundamental metrics. Those metrics were mostly we wanted to put it for our filter so that we can identify which are the stocks that we can actually can filter it out initially itself. And then we said like let's go ourselves on the list of stocks that we can identify ourselves, and let's come up with some number. So I do already come up with a lot of stocks already. Maybe we can see in detail how we can figure it out which 20 stocks out of it will be the number of stocks that we'll stick with. Also, we were also discussing about Fibonacci in the end, right? Where we were saying how much a stock can go up. That was something that we were discussing in detail. And in last 1 month, I really deep dive into that theory, and I really found something great. I mean, if you ask me, I believe that I find something which is really, really, really useful. And there is almost no one, or at least there's no other place where I find that information. It is just out of curiosity. I dig into it. I check in like hundreds of charts, and I do find that that is actually working. So I will like to recap that theory again, the Fibonacci theory of how long it can go up and go down. Um, so yeah, we also have identified that based on that, we need to stick with some high level filters. Like we have to start with global trends, and we have to understand that if global trends are negative, then ideally we also know that Indian market will also going to have some negative effects. And we have tried to identify the list of all the factors which can make that happen. So the global trend is something like an indicator for us to say when things are going against us and towards our approach. So how this will help, we will going to identify when Indian market will be able to follow the global trends. If you see in last 2 months, right? So US market has been outperformed almost every other market in the world. Even dollar has outperformed rupee. um, so all the other economic countries like China, India, Brazil, Europe, they have not been able to deliver a high trend like a bull trend, but in US it is completely opposite. Yeah. So if you see now the global trend is towards US. So we may also may discuss more about this in today's meeting. Also, we said like once we identified what is the global trend for us, then we have to identify which sector we have to focus on, because we know that sector are cyclical activity. So not every sector will go up when we wanted to identify our stocks. So we need to stick with some stocks which for which the sectors are growing, and either we have to find some growing sector, or we need to find a cyclical sector like where the cycle has already been completed for the downturn and now it's going up. uh, and others, right? So we already have identified, like we have to stick with sector, and we need to identify which themes we will going to select, and the valuation, because anything which goes up may be good, but it doesn't matter if it is already on top, right? Then the good or bad stock doesn't matter. So every good stock also will come down. Only thing that will be different in a good and bad stock is the good stock will fall less and the bad stock will fall more. So the valuation is going to give us a cushion. The cushion will going to tell us that at what valuation we are going to buy a good stock. So if we find a fair cushion for the valuation, then the chances of um, growth is higher, and also the risk reward ratio will be higher, right? And I think these are multiple topics to be done, but we'll just try to add all those points one by one, and then we have to in also plan regarding the investment chunks and when we're going to enter. And this is something we were also very much particular to identify, like should we put all the money in the starting, should we average it when it's going down, or should we average it when it goes up after the bull starts, or should we make it something like event driven, right? So all those things also were in our plan. So uh, investing in our approach is not just identifying a stock, but we have to also identify if the stock is really high valuation wise, it's high, or if the way we are investing inside it is actually makes sense. Is it like when we invest after that it fall 20% more? What will be our approach then, right? And will we have any money left when that happened? Or if you think we are going to invest 20% and we then waiting for an fall to come, and if it goes up, then what will be our approach? So all the investment chunks we have to kind of identify, and then the full go on will which mean that there will be a point when we say that we are done with our analysis and now let's put our real money into the market, and also be prepared for all the possible things that can happen, right, either side. And in that case also we have to put the money, because in the last bull run we know that there are a lot of company which goes 2x 3x even 10x, but we were not fully invested on those companies even though we are aware of it, right? So that's a missed opportunity. So even after doing everything, if you're not putting money in right place, in right time, and in right amount, then it is not going to help us. Yeah, it's again a mediocre effort, and we will get a return something like mutual funds. So that's not the agenda. We want to make our money at least 3 to 5x. And the exit plan. So there has been a lot of discussion like when to enter, but we need to also make a plan when to exit. And I think this is equally important. If 50% effort goes till here, then the 50% planning must be there for exiting. Because a lot of time when we know that things are going up, still we need to sell, because our plan is not based on finding the top, but our plan is based on some risk reward. So should we exit completely? Should we exit partially? It's all the points open to the table. We can discuss more on top of it. And um, other than that, we have list of stock. So how I would like to first start it is today's meeting is first to discuss regarding the Fibonacci again, because I find something very interesting and I would like to share that. Um, can you suggest me a stock name? DMart. Okay. So DMart is also called Avenue Supermarket in India, and as per today, DMart is falling. And by the way, I will like to revisit the screens that I have here. This is daily chart. This is weekly chart. We need to have both, because weekly give us a bigger picture. Like when you're going on a plane from the top, when you see something down, then you have a better opinion of a problem. Similarly, when I see something from far, like weekly or monthly, I do get a better understanding. And that's why I would like to have weekly also on for me, and daily for sure, because daily is something which help us identify. We then have multiple EMAs on the chart. Then I have few indicators, fundamentals and technical indicators on the chart. First is EPS. EPS is earning per share, which going to tell us if the company is making money. PE, PE is going to tell us if the company is really costly or not. But there are many more points on PE, but I can say that the P is falling down. So you can say that the valuation, or at least if the stock is costly, that theory is coming down. Yeah. ROE, because in the end the company need to make return on equity, so that should not be negative, and even in good case it should go up. Debt to equity, so that's going to tell us if the company is taking too much debt. So if a company is taking too much debt, it means that the company is actually trying to either expand, or the company is either trying to really do something and it may go against them. So it is important for us to know if the company is actually having debt or trying to take more debt. And then I have RSI in both the chart. I also have comparative RS against Nifty, which tell us how the stock is performing against Nifty. So normally the theory is that if the orange line goes below this center line, that means it is performing not good, because even Nifty is performing better. So we should not stick to those stocks where it is performing below this line. Yeah, it's a high level overview. MACD, it also tells us if the momentum on the stock is there. So if the line is below the center line, it means that the momentum is actually not there. So if you find some stock where the momentum is there, or even in this chart, before 2022, you can see, right, the momentum was there, right? So anything like this is entertained in a bull market. And this is more like the momentum is actually went away. So there's no big player who are either playing at the moment, or neither the chart is on the upside. Operating margin percentage help us identify if the company is actually making profits, and that is very very important, that regularly the operating percentage wise the company is making money. Peg ratio is something I make it reasonably late, like in past, and I wanted to add it because it tell us whatever the price is and whatever the valuation and in total is it costly. So it doesn't mean if it is costly, it cannot be more costly. But whenever you see red line, it means that PEG ratio says that it is getting costly, right? So if I can buy a phone for 10,000, if I'm buying the phone for 15,000, it is costly. It doesn't mean the phone cannot be available even at 20,000. It can go even 20,000, 50,000. But even in that case, it is costly. So valuation wise, it is an important parameter on a single view to identify, and the RSI for weekly. Yeah. Maybe I will like to open something um, like NVIDIA, and I will tell you why. In this case, if you see there's a growth for EPS, and PE is mostly like price earning ratio, means that if the price is going up, then P's also goes up normally. But in this case, it's not going up because the EPS has also gone up the same way as the price has gone up. That's why if I expand PE, you may feel like PE is not expanding at all. It is good. So the company valuation wise is not increasing because the EP is expanding too high, right? Like the moment when it was 0.42, now it is 2.6. So even the EPS itself has expanded like 5 times. So even in that case, if the price expanded 5 times, it's pretty much acceptable. And also I would like to show about MACD. So here we can see that the MACD is actually telling us that the company is having a higher momentum. Yeah. And other things, even here, see the PEG ratio itself says that the company, even though it's going up, even it become like one of the biggest company in the world, it's still, but even now the company doesn't look like it's a costly company, right? But recently I have decided to exit from this company because of the chart patterns. Yeah. So we'll discuss more about this, like what is the plan, why you want to do it. But I just like to show you first what is the existing list of parameters and the indicators that I do have. I would like to take some other example. Okay, let's take DMART. So if you remember last time, yeah, even I make a note here. See, do not get into stories if it's going down, because yeah, I think I make it in past this thing, because even now EPS look like it's increasing. The moment when I make it, maybe that time it was going down, or if I make it yearly, weekly, then also, yeah, I think there was a moment when it was going down. That's why I've written here. But I think the fundamental problem with DMart kind of company is the quick commerce, like Blinkit or others, or any other e-commerce platform which also give competition to DMart, right? So the moment when it started the business, that moment they have the kind of edge against other companies. So the moat was that they actually own the land, they were actually outside of the city, so even the rental was cost not so costly, and the prices were competitive, and people still like to go and buy the things. But now in the age where most of the metro cities do have facility of e-commerce available, like you can anyway order anything in your small town also through Amazon, or you can actually can go to some other companies like Agio and you can buy the clothes. You can actually can use Blinkit kind of services to get things done delivered to you easily. So that gives a lot of competition to this kind of company. So the growth that DMart has made in past, it's not really a benchmark anymore because the fundamental has changed. And whenever on a weekly chart we see this kind of double top, I have a strong belief that this is a bad indicator. So it may not fall down tomorrow, but this is a possibility that this will go down. And the other example of this happening in past is Tata Motor. If you remember, we've seen this chart also. See here. So Tata Motor also make a double top like the similar like DMart, and thereafter it falls down, right? So for us to say like, is it a good time to invest in DMart? I would try to take myself away. Yes. Another good, yeah. My take is also no, because retail segment is very constant and going on between the Webflow, Blinkit, Swiggy, Instamart. We have 3 to 4, right? They are burning the money and a lot of things are going on currently. So I think it's better to avoid retail segment itself. Yes, exactly. Right. Rent. Let's see. Titan. Let's see. Just thinking, not sure how it will be, but somewhere I feel that whatever the retail segment, right? But previously they did very well. Yeah. There's a huge competition, and if we see the jewelry side, right? The jewelry, and it's a market leader also. But there are so many companies are coming in that if I see this, I'm following the IPO as well. Yeah. Jewelry side, I mean, so they are yeah. Take the watch segment, right? Yeah. Again, so many companies are giving tough competition. So anything can happen. Yeah. With the so so true. To stay away from the retail segment at least now. True, true. All companies. Okay. One extra thing I would like to add, we must focus on those companies whose EPS are getting positive from negative. Okay, let me explain you why. This is EPS, this is daily chart. I go back, okay? See, this is trend. We should not invest in trend when the EPS was negative. But when the EPS getting positive, if you see here, this is the moment. So somewhere at 980 or something when it become positive. And then when you see that there's an upper line, so if I expand it, so from about 3.6 to 10, it's a 3 times growth. So when that happened, thereafter you see the EPS has keep growing. So when the EPS was negative below this line and when it goes up, that's the moment when something big changes in a stock. And even if you see that moment, the stock was somewhere at 1000, and from that moment it even reaches to somewhere like 8000. So we should focus on those company. And you can say like, what are the other example I can take? Let's take something like Adelysis. Okay. And why I took this example, I will tell you. See here. Oh, okay. Maybe let me make it weekly here so that I get a better chart. So if you see here, this is getting negative here, okay? But then it become positive. And the moment it become positive, it was about 50 rupees. So let's expand it. So it was actually getting up from here to here. Then it comes down, but not below zero. But it again goes, trying to goes up, right? But what happened when something happened from negative to positive? When something happened from negative to positive, you can see here that the price also consolidate, and then after some moment this can go up, right? So this is an important indicator for me, which I have seen in recent past, that we should focus on those company where the EPS is going up, because EPS will go up from negative and even the price will not go up. So it will become ready to go up. So it will help you to be ready. It doesn't like something goes up and then we see, oh, it already up, what to do. When EPS is from negative to positive, that will going to help us to identify which stock can be good for us for future. So in our preparation, if you find some company like this, is better. Do you have any other example in your mind?
So EPS from negative to positive.
Anything. We will see if that's happening there. So let's take SBI. Okay. So let me make it. Let me. Yeah. Sorry. Oh yeah, of course. But let me make it weekly. Yeah. See, SBI in 2019 was having negative, and then about 2019 it become started getting positive, right? So that's the moment. If you see, even if you enter, even in COVID fall, the fall was there, but EPS are going up. So this is a good moment, because fundamentally we are saying that company is making some money from negative to positive. So that's a good moment to be in, even though the company's price is not going up, but because of EPS is going up, this shows that the company will go up in future. There's a strong chance. So it's not like every time it happen, but there's a strong chance. There's a company called Isuzu, which I also discussed last time, if you remember. Oh God, again I don't remember the name. Isuzu or SML. Yeah, this is too difficult for me to find. Okay, let's say Maruti. Let it be. Okay. Yeah, just never fall down. Okay. Let's take some bad company. Do you have any other name of the company which? Sorry. Yes Bank. I don't think Yes Bank EPS is positive yet. Yeah, I mean, it is still negative. If I okay, it started getting positive from 2022 July. If you see here, right? But the losses were so high. No. That's not a parameter to invest, because it can come down, because the losses were like, if you see here, it's minus 84 and the positive is like point 5, right? So it's not even equivalent to discuss, like, is it good enough? But I can say that company is actually now not making loss anymore, right? But the time it will take to go up, we don't know. It is too long to predict. So this kind of company should not be in list of the top 30 or top 20. This kind of company, you can just say that I believe I wanted to wait for 10 years in this stock so that it goes up. So those are the fine. Those are few of the things. So let's find some of the stock that I have identified. For example, Bajaj Electric. Okay. And then I will also discuss about the Fibonacci plot, which I just said. So see here. Do you see this? The EPS was going down, then it become up. So this is a moment when we can actually, and if you even seen weekly, you feel like this is a moment when the price was also going up. The momentum was up, MSCD was up, company was making profit, the comparative RS was going up, the ROE was going up. You know what I'm saying? The debt was going down, and the EPS, which I just said, is going up. So even if somebody would invest something like on the top, previous top, he can actually can make about 1.5 times, right? So this is a good indicator, which I have found. Now, why I'm telling this now is because when, okay, why stock market in India is falling down? Mostly because the result and the earning are going down. Okay, with all other factors, this is one of the major factor. Because when a company doesn't make money, it it should go down. It will go more down. Okay, in that case the EPS will become either negative or it will come close to zero. So all the stocks that we wanted to buy, When it become negative to positive, that moment it should be in our watch list. And when the second quarter result comes, and if this kind of trend happen, then it should be considered as one of the top pick for us. That's what all I mean to say. Okay, let's take another example like Venki's, because this is more practical than just looking into a stock. Now, if you see Venki's, yeah, no, let's not take Venki's for this example. This is different. Dream Folks, okay. Let's take something better. Um, Manapuram, okay. Oh, what I opened? Manapuram. Okay, this is also performing very well. With Bata India, is Bata is something that not performing good. No. Okay, but Bata is a good example for us. I will tell you why, or even why it is in my list. If you see, it was up, then it fall down. How market behaves is that since the EPS will go down in coming quarters, the companies or the promoters or the big investor do take action based on it. So they may buy or sell when they get to know that the EPS is going down or going to be going down. So the moment when it started falling, right, or it is not growing, is the moment when the EPS was negative. Okay, and then even if you see it become negative to positive, but the price has not really followed that EPS growth because of multiple factors. Okay, now since the company is making money, only two things can happen. Either the EPS will now go down, leave about price. Either the EPS will go down like it goes down previously, and in that case, the stock price will also go down. Or since EPS is already giving money, which means that the company is already making good money and the price is not going up, and the result of it is that the EPS is keep going down. You see that? Sorry, the PE is keep going down. Why? Because the company is making profit, but the price is not going to show that. So in that case, the PE will fall down. So if this is happening on a good stock, it means that it is a good opportunity. So even if you see historically, the PE for Bata was never so less, right? So what I'm all about to say here is that a company which is not making loss, but the price or the valuation is very cheap, is a good candidate for us for the growth. And even if you see here, this look like this company has been consolidating for a longer time. Like the price that we have today is the same price that we also have in 2019. So if company has done almost nothing, yeah, okay, just see this phase, okay, of 2014 to 2017. If I say this way, so this moment company was kind of consolidating to a price and then it goes up. So there's a huge possibility that even now the same is happening. The company is trying to consolidate its profit that it has received in time, and after a certain time it will go up. So company like Bata India is a good company, and I'm not talking about other things. Okay, there are a lot many competition to it. It also has dependency with international brands. Plus there are very price sensitive market. You cannot increase the price like sneakers, right? So all those things retain in the same place, but I'm just talking about the valuation part of it and the price part of it, that this company is in good place.
Fundament,
Yeah, tell me.
you mentioned that there will be a lot of competition.
Yeah,
Let me see how others are doing in the same session. Like
let's open Relaxo.
Metro brands also doing good, I think. So,
Yeah, we'll open everything one by one. So Relaxo is a competitor of Bata, and I think these are the two players which actually have like 70% of the market share for footwear industry in India. And even if you see here also the market has been corrected. So it means that the sector itself has not performed in past 2 years, 3 years. So there's no fundamentally wrong maybe in Bata, but the sector itself has not performed, and that we can see in here. And you say Metro, right? Metro,
The branch.
Metro brand. Okay, let's see. So Metro brand is, yeah, it's not going up, but it's also not going down. It's also consolidating. So for a
Then
small,
let's say
yeah. No, Relaxo was equivalent to Bata in the chart. If you see, it's going down, even though the company. But even if you see here, the EPS also was down at some point, and now it is stagnant at some point. But in the end, what I'm talking here is company is fine, industry is going, sector is going down, because of which the bigger player of the sector also is going down, and the PE is reasonably better. Like 77 PE for Relaxo is fine. It's not bad. So these are, I mean, if you think like a fundamental investor, then this is fine. Okay. Technically, we can say that this has break some important levels, so this is not a buy thing. But I would say that for the case of us, what we're looking for, these kind of company matters more. Okay. I will tell you why. Bata or Relaxo is because, for example, right, this company is at 1000, okay, assuming it become 5000, then you make 5x, then you make 5 times. But now this company is about 500. If it now become 5000, you make 10 times. So to get an entry at a level where people are not willing to buy, give you more opportunities if you really have a faith in the company. You know what I'm saying? So this actually is the moment which can actually give higher times returns than buying this company at 1000. So if I have to put my 100 rupees into it, maybe I would like to put my 20-25 rupees now itself. And I have to ask all those questions again, whether this company will bounce back or not. Because shall I open Nike? You will be amazed to see a Nike is a global brand. It's also falling down, right? So this is not something that we can say that this is happening only to India. There must be something wrong in shoes industry that I am not aware of. But I can say for what?
I don't know. It has.
Adidas. Okay. Adidas is listed. I don't know.
Have.
Adidas is not listed, I feel, because it should be in NSYC or somewhere. I don't see that.
What
Adidas.
the international market?
Wow. I'm not so much into that, but uh,
Just to see.
but I think Adidas is one of the company which I have also. Sorry, Nike was one of the company I also have researched recently, and I get to know that that Nike is
Pictures.
what
Pictures. Pictures. Pictures.
spelling
Picture. K-E.
SKE.
K-C.
Okay, no, I don't know. May not be there. Okay, that's fine. Okay, I would like to add few things here regarding Fibonacci now. So last time, if you remember, we have put something on our Nifty, right? Mostly it's the Corona time, and we use Fibonacci here, and we
I know the name. S-K-E-C-E.
SK, yeah, C
Pictures.
Sketchers INC. Okay. Um, I don't think it is a very successful story. It's fine because from
Okay.
2015, what it was doing now also it is doing the same, right? Almost the same price. I mean, in 10 years, if this chart is like this, then it is not really a good bet.
Okay.
Yeah.
These one crops. They are words. Crops.
Crocs INC. Yeah, same.
Same, same thing, right?
Yeah. Yeah. So the industry itself is falling. Okay. And there could be multiple reasons for it. But if you ask me valuation wise, this is good. See, the company is making enormous amount of money, right? But
Mhm.
the price is not reflecting the same. And because of that, the P would be falling down, right? Okay. Yeah, let's come back to Nifty.
Yeah.
Now, I put something here and let me make this chart larger, um, like this. Yeah. See, if you remember last time, we also put Fibonacci like this, and we said that we believe that the top of the market has been made for some time. And why? Because it has now crossed 3.6, and we said previously that 3.6 to 4.2 is mostly a end of a bull cycle. Okay, so I have a belief that we have already either reached to the height or we are about to reach, which is 27,000 something 700. So either of it will be true, but even if it goes down from this level, I would not be surprised. Now, with that assumption, I actually have checked this Fibonacci in a lot of chart. Okay, um, let's take Reliance. Okay, and let's take Fibonacci here. So how do we identify the Fibonacci points? We identify Fibonacci points with the last fall, the last reasonable fall, and then we say that the stock can go up or goes down based on that. So if the low is not been broken, we believe that that is the last Fibonacci point that we can start with, and from there, when it goes up, then one is crossed, and then the next point is 1.6. And my faith is that any good company which has a high momentum will going to cross 1 to 1.6 pretty easily. But then it depends. Sometimes it also cross 2.6, but sometimes it just play around in this range. And after some time, it will make a base around this line, and then it goes up to 2.6. But then again, it has to stop, which it has also stopped. You see this line has been pretty much valued, but then it goes down, but it never crosses 1.6. It can also, there's no hard line to say that it's not, but even though mostly the activities will be around this zone 1.6 to 2.6, and once it will cross 2.6, the last level is 3.6. And the same happened in Reliance. And I was so puzzled to see that this is happening almost everywhere. I mean, let's give some other example. Can you find some other example?
Yeah. See, I'm just thinking how it is like people, even if the people don't also they will buy and sell the shares. Like today also they are buying and selling the shares. Uh, how that matches with the Fibonacci series in the graph?
Yeah, yeah.
How exactly matches with this Fibonacci?
I have a feeling that these are underground rules of the market, and those who actually have money, those who actually big bet on good money, they actually do follow these practices. So when they know that their money is at a level, then they make a decision and they either goes out or they make an entry. I will tell you something, huh? um, I will show you.
This is
Yeah, 1 second, I will show you something. um, I think it is dollar index. Yeah.
mm,
Okay, this is dollar index. Okay, if I have to, okay, and let's make it monthly for simplicity. Okay, um, okay, and I'm doing also for the first time. I have never done this on this chart. So if I take the start and the lowest point, just like this, no brain. Okay, start is the start of the time of the dollar index I have in trading view, and the low is the low, ever time low. Even if you see here, the patterns are pretty, I mean, if you see this, right, you will have a different view of looking into a things. See here, the moment it actually has broke up, is the line when the one was getting broke up, and then the life started between this range. It's like you have a time between 1 to 18 years, you cross that, then you get into a life phase of maybe 18 to 25, then you leave that life, then you go again in the next phase of your life, something like this. So if you see now dollar, don't you think that it actually trying to go to the next level of his life? And this is just an example, huh? I can show you n number of things like this. Gold. Okay, gold is one of the thing that people say that this will be this will always goes up, right, in time. Let's make it weekly. Okay, now I don't want to make a chart like this because this is mostly in uptrend. So what logic you will put? But still, this is the last correction, which I think is reasonable correction, right? So I just take this example, talk to the bottom that moment. Even if you see here, right? Um, it took time to cross one, but then it is pretty much easy to identify and say that it goes up, it plays around, it took a support at one, and then it tries to cross 1.6. It didn't, it took a support and then it crossed 1.6, and then it goes to this era, then it tries again, and now it is making base on 2.6. So this happens. Okay, I'm not here to say why, I can't, but I know that these things happens, and there are smart players around who knows these things, maybe, and they make good decisions. Now what is there for us? What I identified for myself is that not every stock will cross 3.6. Okay, there will be only few stock which will cross 3.6, many will come down. So I cannot really bet myself between above 3.6, but anything between 1 to 2.6 is the zone where I would like to play in. You know what I'm saying? Let's take an example. um, let's take a good example. Okay, some good, okay, let's take Tesla. I mean, it's not in my list, but let's take Tesla. Okay, see, Tesla, if okay, it will be fair to say this was the last high and this is the last low. Good enough to say that, right? And if you see here, it has now crossed one. So if I would have to say that what or how I would like to play here, then it would be something like this, where from 433 till 900 is the time when I would like to play, because I have a strong belief that the momentum has started, and if the stock actually will go up in this range, then this look like it will go up. And the max also we now know, because we believe that anything more than 3.6 to 4.2 is overbought zone. It can go up. I'm not here to say no, but at least that is the moment when we can say this may not happen. Okay, there's a possibility that it will come down before this. How I know this? Because if you see the last bull of Tesla, okay, let me say something like this. See this one. The last bull run of Tesla somewhere in 2020 started, and the price was about 25 dollars, which went to about 400, right? So this is crazy. Now, if I come here and would like to make a top and bottom of previous time, it will be this and this. Fair enough? Yeah. And even if you see here, right? If you see here, the price actually crossed 1, and between 1 to 1.6 to 2.6 to 3.6, it just went in and stretch. So it's like you are climbing a mountain and you don't stop yourself at mid. Okay, you just trying to run on top. What will happen is you will fall down, because you actually make a plan to go up, but you should take a halt in between, you should take a rest. But when you don't, then you need to fall down, and that's what even happened here. It actually breaches down the 2.6 and 1.6, and it even touches 1 again. But because it actually has shown the strength that it can do it, unlike other, it actually get a high bump from here. but that is out of our range. So what should we do? We should delete this Fibonacci and we should make Fibonacci here because it already have come down from 3.6. So after 3.6, the rule is reset. That's what I'm thinking, huh? That's the rule I'm making myself. So from here also, I mean, how long it can go up, I don't know. I don't care actually. But between 1 to 1.6 is something happened in 2 weeks to 1.5 weeks. And then it take a break, it settles itself down, it goes to 2.6, and then it make, see, once you go up, more up, then you face more resistance because people who already purchased it down, they will sell. Plus there's a limit to go up, right? There's an upper cycle limit. You need to make a new road to go up. So that's a difficulty phase. But whenever that happen, I can say that okay, it then go to the next level always. And that's the sign of a great company. But okay, so why I'm telling all this story? Because for us to make money between 65 to 130 or 65 to 170 was easy. We know what to do, right? We know the ranges, we know what to expect because momentum will start. We believe that, right? So we find a good company, we find a Fibonacci when we believe the good thing can happen. Even if it falls down, we do not get scared because we know until where it can fall down. Plus, we know when to exit. I mean, if you ask me, if I would have purchased at 64, I would have exit at 170, even though this goes up more. Okay. But anything above this level is God grace, right? So I cannot really say this will happen or this will go down below because I have a strong feeling that whenever this happen, right, then you have to actually sit on this stock for a longer period of time because the growth was so fast, so the waiting will also be fast. So anyway, assuming you entered at 60, you get out at 170, it itself is like 3 times, right? And then this is the high and low. So the clock has reset. So here and here, good enough. When you enter 302, right? You even know when to enter. And in this case, the rule breaks. How? This goes from 1 to 1.6, but then it also break 1 pretty strongly. So it is saying that at least in this phase of the stock, it is not so strong. That's why it's not going above 1.6, which it was able to do previously 2 times. So if I will be here, I would like to exit myself somewhere here, 280. I mean, even though there's a loss, it's better to take a loss. Not because it is going down, because my theory is not anymore proving right. If it again goes up, like for example, I exit here. If it goes up again, I will again re-enter it. But until it doesn't really prove me that the theory is on my side, there's no way. So even if you see here, right, it says that in this phase of growth, 1.6 become the top or the higher limit for the Tesla, and that's why it falls down. So we have to delete this line because it's no more the right thing. And then what happened? If you see in a bigger time frame, it actually make bigger things. So this become high, sorry, this become high, and this become low, right? So we only concerned when it is growing, crossing 1, which is now. So if you see Elon Musk wise, he's at the best shape, right, for this bull run. If you believe the Fibonacci works again, then this is the best time. And how long it can go up? We know the levels. We know that from 433, it can go till 612 or something. And if it is strong enough, then it can even go to 920. How much percentage of growth is there from here? It is from here to here is 113%, and here it is 40%. So 40 to 100% is the chance. Now, why I'm telling all this? This is not for us to act immediately. But when we find a stock and we bought it the chunks wise, the second and third chunk, when you put it, we have to go full on, right? This is the full on level I'm talking about. Whatever I'm talking about is the full on level. You get my point?
Mhm. Mhm. Yeah, yeah.
So if you like to play small, you can still play like momentum trading. But for us, I think full on is more important. And this is something where I would like to play between 1 to 2.6. And whenever that happen, even if you see, right, you will get to know that this happened pretty quickly. I mean, if this take 3 years to make this thing, then the other thing will be there in 1.5 year, half of it, or even less than that. So this is also called time-based trading. Huh? This is a proven thing in the world that this is time-based trading. And what are the symptoms of it? The low will not be broken, but you will come close to it. Second, you actually will make a time-based price activities. So nothing will happen. You will feel like, so all the people who are in the stock will feel fed up and they will go away. And this is the moment when they will exit. And once you will make people lighter, then the stock will again starting going up. This is how normally it happen. Um, how about CRM, Salesforce? Okay. Um, this stock also.
So the name is CRM, is it?
Yeah, yeah, yeah. Salesforce is CRM. So this company, even if you see, this is having a lot of up and down. Okay, and this is a pretty how I would say, after 2022, this is a difficult chart. Okay, so before I analyze current time, I would like to put something like Corona. Corona is a good filter for us, right? We all know that in Corona companies actually has made a base. So this is a good filter. So if you see here, the company after 1, it goes to 1.6, it comes down. So it already shows the, how to say, less strength or weakness on the chart, saying that, hey, I'm unable to go to 2.6. And when it tried to goes up to 2.6, it didn't able to touch it and it comes down. So this is good enough to tell us that, okay, I'm not strong, I'm going down. So anybody who has bought somewhere here does not need to wait really here, because now the stock itself has said that I'm not going to touch 2.6. So it comes down. But it did not really touches the Corona time low. So, but still the theory has been proven wrong. So next high and low is this, right? Now, if you see this, this is pretty good. It tried to go above the 1, it didn't, it comes down, and then it tries again, it's able to cross it. Now it is taking support at 1. There's a huge chance that this will go up, and I'm still in the path of figuring it out, how how much it can comes down. Okay, so my belief is that, normally, for example, in this case, right, from 1 it goes down till somewhere like 50.5. So I have a belief that this is the moment when we should actually see that if the price is coming down towards the weekly 200, then that's a good moment to buy, because that is the moment when the stock will going up. So there's a moment here, but it's also somewhere here. It is near to the 200. So these are the moment when somebody should add more money. Yeah. Good examples. Ask me any other company, anything. We'll see.
So
So Microsoft is of a different league, huh? Let's see if it follows what we are just saying all the time. Here to here. So it crosses 1. Okay, it doesn't crosses 1. It tries, it comes back. It took support at 20 EMA. It then goes up. So it goes up from 1 to 1.6 pretty easily, less time. But it looked like it was unable to cross 1.6 to me. So it is trying to make a base around this level. What to expect? I'm expecting it not to fall down, but to make some kind of chart pattern here, and then goes from to 400 to 580, 560. So whenever this chart will go up from here, this is, at least for this theory, this is the buying zone. Last buying zone was here, right? Um, and of course, there are a lot many things which matters in between. But normally good charts, like a parabolic chart do not have a lot of things in place. Mostly we should look for those chart which are bit more difficult charts, I mean, which has also seen a loss in fast. um, like Dr. Reddy. Let's take Dr. Reddy. I'm not sure if I'm ready with Dr. Reddy. Yeah, this chart is interesting, right? So let's take 2015. Now, if you see 2015, it says that it crosses 1 but is unable to go to 1.6 as per our theory. It comes down, but it was unable to cross the blue line because this is our 200 EMA for weekly and we know it is strong enough. And then it try again to goes up from 1, and this time it reaches to 1.6. Then it's slowly and gradually trying to go up, because these kind of company do not really um how to say make big moves. These mostly goes gradually up or even comes gradually down. So this is good enough. I mean, if you understand this by this way, saying that okay, it lives a moment in 1.1 to 1.6, but that life is done, now it is going to next phase of its life, right? So yeah, this is a different way of looking to charts. That's what I keep saying. And yeah, let's take this one. Yeah, will come. Let's take this one, 2008, right? So in 2000, okay, is it the high? Yeah, it is the high. See here, I'm just trying to see if this theory work even in past. So 1 to 1.6 easy busy, 1.6 to 2.6 easy busy, but then it slows down. So life between 1.6 to 2.6 was not so easy busy, and it tried to cross it 2 times, and it crosses third time, and then it took a support at 2.6, and then it goes to 3.6. So what it all saying? It is saying that it is pretty easy if you see from a far view what is happening. We don't know what's happening, but we know that the chart is getting respected. So even if you buy something here, even though if it falls down, you have a confidence to say that, oh, I know how long it can fall. Or even you may say that this company will go up even from this point. So this money from 350 to 450 is good money. It looks bad, but it is good. It is something like 30%, right? So 30% maybe in like an year is a good money in a good company, right? So Sun Pharma, you said? Sun Pharma.
Yeah.
Sun Pharma is India's largest pharma company, right? If I'm okay. So Sun Pharma, I have been following this for past few days that Sun Pharma actually has a real bull run before 2015, huh? And after 2015, the bear phase for pharma industry has started. So because of that, even Sun Pharma have that thing, but now it make a base.
14 to 2019, up to 19.
Yeah, yeah. Just see this, what we have here. Pretty good, right? I mean,
So 1.6,
yeah,
passing 1.
yeah. So that's why I keep saying 1.2 to 2.6 is our game. Even if you like to squeeze it a bit more, then 1 to 1.6 is the game where people can make money, or at least we can think about adding ourselves more, so that because we don't know when 0 to 1 will happen. This may take 1 year, this may take 10 years, right? But we know that there's a moment in future which can be predicted well. So these are the moment. But if you just remove everything, this look nothing, right? I mean, this look, there's no way to identify what is happening.
Yeah.
And I was so astonished by seeing that, because things become so easy. Yeah. And Apple. Now, why Apple? Um, let's take any big point, okay? Maybe from here to here. Yeah. If we take this point, like this is the high, this is the low. In that case, one crossing was difficult, right? In the third attempt, it crosses one. So it also says that the triple top has been broken, or the double top has been broken, and then it goes up. So this also actually is a good way to see. And then it reaches to 2.6 and then it tries to come back. It took support at 20 DMA and then it's tried to again go up in the range of 2.6 and then it is living its life here. It can come down for sure, but still it says that it has actually been able to cross the barrier of 1 to 1.6. So this works, right? Coca-Cola, Coca, let's see, or what? Cola? What is the stock name? Co. Oh God. Okay, let's see. Yeah, yeah, yeah. I can take any point. You tell me which point should we take.
2022.
22. This one? Okay. So this to this. Yeah. This would be exactly what I was thinking of. Um, what I expect is that this is the moment when we should live. It can still go up, okay? There is no limit to say how long it can go up. But if you entered, so most important point is when you enter. If you entered here, 650, and if you are at 1300, it's fine. 100 times in 2 years is fine, right? So with a company like Coca-Cola, if you can make this much return is good enough. Okay, I think I given enough example. I have one more point, huh? Very, very important point. And maybe people don't think that way. Okay, tell me one thing. Okay, just a question. If I bought something for 100 rupees, that become 150. Okay, and I have a belief it will go 300, but it actually fall down to 120. I do not sell. Okay, then gradually it become 150, it become 200, it become 300. So I was right, right? So maybe I should put this here, maybe even here. It's more than 150. Yeah. So I purchased something at 100, that become 150. It then become 120. I did not sell because I am saying I believe it should become 300, right? So it actually comes down, then it become 150 again, and then it become 200 and 300. So I'm a smart guy. I mean, logically, what I think has happened.
Of course, yeah.
No, no, I'm not a smart guy. Okay, comparatively, why I'm saying this? If okay, how many pieces? Just say I have 10 stocks. Okay, now for 10 stocks, I purchased for the price of 100. So I actually have put 1000 rupees, right? Which become 1500. Now that has fallen down till 1200, right? That's what we are talking about. It then become 1500. And
you are
then
not in this process, you are not averaging anything.
no, no, nothing, 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 nothing. We just we are buy and hold investor. Yeah. So from 1000 to 1500 and then this. Now there's a possibility that this can go even to 900 or 800 or even 0. I have not exited. I had no stop loss. I was not smart. First point. It goes to my direction because of my thesis. Yes. But do I make a good risk reward ratio and analysis and preparation? No. But even that is secondary. Even now, my base was 1000 and I make 3000. So actually, I make profit of 2000, right? But how about, just think about it, okay? If it was 100 it become 1500, sorry 150, and I know that from here it can actually go to 120, so I exited. It's possible, right? Many times we know that market is going down, so my price will also go down, but then we say, it will again come back, why to sell it? Don't sell it. But if this use case wise, if I'm selling it, then I actually make 50. Okay, now it fall down to 120, and I'm actually aware that 120 is the level when it should bounce back, because I was there, I was seeing that. I just did not take any action. Okay, so I now am 120, I re-entered. Now the point is, previously I have 10 shares, right? I make a profit of 50, so now I have money for 5 more shares. Am I right? If it is 100, if it is 100, if it is 120, or yeah, if I have to buy 120, it means that I can at least buy four more shares. So why I'm telling this here is, I actually at 120 I could have bought now 14 shares. Just listen to me, huh?
That's correct.
Yeah, yeah. And then it become 300, and when that happened, I actually make more money than 2000 for sure. So we make proper planning to exit when we believe we should exit, and we do not really spend that money, the earning, because we get the principal plus we get the growth money, and we put the same amount of money in the reduced price when we think we are ready, and then we sell it when we were actually thinking to sell it. By doing so, we make more than 2000. I don't have exact calculation, we can do it in table, but I have a belief that there will be some percentage differences. Now, why I'm telling this example, we now know that there are big players who do entry in a stock and then they sell it again. Even though we believe that in long run it will go up, right? But when they exit in the right moment and when they re-entered again in the right moment, by doing all those magic, they increases their percentage earning in the end, because they at first point is that they actually has kind of removed themselves from the risk of going down because they exit in the right moment, plus they re-entered when they believe it's the bottom. Now in the strategy that I'm talking about, we now know when this will go up and when this will go down. So why should we stick to it? Why should not we come out and then we re-entered when we think it is the right moment? Let's take another example. Tell me other stock, one more stock, good stock.
IOCL.
What? IOCL?
Yeah.
Ah, you means Indian Oil Corporation, right?
Yeah, then
Yeah. Okay. Let's make it bigger.
see, I'm 50 for that thing, whichever you said, right?
Yeah.
150, that's okay. You said that we can, in some cases,
Hmm.
um, if if our decision is correct, then that is fine. You sell
Mm-hmm.
at 150 and you will repurchase at 120.
Yeah.
If it goes back from 145 itself,
See here, this example. Okay, we'll take your question. We'll take the question. Like, what if it doesn't really follow our path, right? But if you take this example, this has make a high and grow in Fibonacci. It goes above 1, but it did not went to 1.6. Now what should I do? Should I wait because I believe it should go to 221 someday? So I should wait, or the approach 2 will come out, because we know that if it is trying to test the level again below, we know that before going to 1.6 it will come down. How much we don't know, but it will come down. So I will exit here 166. I'm still accepted in the society, right? If I do so, because I'm saving my money. It is your money. You have to decide when to go up, when to sell it. I know that if it doesn't really follow for which I have entered, then I'm saving myself. That's it. And if it comes down, then I will rebuy it, because now I know that okay, it actually will go up at some point. So I am getting another opportunity to buy it at 120 plus. Now I even do not have to wait for the time. There is no time based correction that I have to wait. I will only enter when it will cross 155, right? So this is one approach. Regarding your question, what about if it goes up, if I sell? There's a possibility. Okay. Like there's a company, um, one second, huh? There's a company, one second, let's find the SMLI studio. Okay. Because I remember that I was wrong in that. Yeah. Oh, this much only? Oh, no. Yeah. It's a bit more than that. Okay. See, um, here to here. Yeah. This company has gone up. This is good company. It really about to touch 1.6, but it didn't, right? And then it comes down till 0.76. I mean, it's below 1. And now it is near to the weekly EMA. There's a possibility that this will bounce from here. But still, this is good example again that I should have exited at a moment so that I will save my capital. Okay. And where I was wrong, maybe I can say I was wrong. Yeah, I can be wrong anywhere. Let's make it daily because then it gives us a better picture. Uh, yeah, like this, somewhere in really past. Okay. So this is the moment. And here from 1 to 1.6, yeah, let's make it much more bigger. Yeah. From 1 to 1.6, it went really faster, but it then comes down. So assuming I just said I will sell it here because it's look like it is not going to 2.6 and then it becomes circuit. If you see, this is circuit and then it went to 2.6 pretty easily. So I lose it. I believe it's fine. Why? Two reasons. First, I make profit and I save myself from the loss which I have predicted because of n number of reasons. Okay, but I was wrong, which means that I lose the opportunity. But if I am really concerned about this stock that I will going to make position only in this stock, then I will re-enter again here. What will happen? I will now be going to say that, okay, I did not really make money here because this opportunity I have missed, but it's fine. I will make money from here to here. So this is something that we have to still decide which path we will choose it because do you really want to stuck to a opportunity and wait for luck to help us or we wanted to make a decision and then stop ourselves so that we don't stuck to a company like Bata, right? We have seen Bata now. See, in Bata, what happened to us? Oh my God. Okay. um, Weekly. Let's make it weekly. So in Bata, if you see like this, if I take Corona up and high, see here, this is a pain, right? From one, I mean, the moment it actually has gone above one, it looked like it will going to make it till 1.6. But if we really have seen that, oh, it's keep making lower and lower prices, we should have come out of it. So this is a problem which will come in the trading in the way we are planning because there will be two life, huh? One where you make a line and it goes up, and another when you make a line and it goes down. So when it goes down, we need to make proper planning so that we do not really stick to it for longer period. We need to make a stop loss. This is also important for us to know because out of 20, 30 stock we're going to choose it, there will be some stock which will have this life cycle. So we need to come out of it and we have to quickly switch to something which is in demand. It's more like job, right? So if Civil is getting outdated, then it's a good idea to jump between Civil to Salesforce. There's no need to stick to that technology for longer just because we believe this will be on our side. So instead of believing to the luck that it will help us, we are taking loss, and a loss that we believe is and considered calculated loss, and then we go and we look for something where this is not happening, because in the end we just live on market mercy. Okay, so the same logic work here. If you see here, right, the same logic work here and the same logic does not work here. So there's nothing that we can do on top of it. Only thing that we can do is to put a stop loss. Now why I'm keep talking about this is because the benefit of this design is we make more money with calculated and planned risk. Second, we never be stuck with the time based correction. When we will be stuck, I mean, there's a possibility, right, that between 120 to 150 it takes 10 years. It can possible, right? What we will do then? It will go to 300 but in 15 years. Then so if 20 stocks means 5% of your portfolio stick to a company for 10 years, that is not right. Yeah, but this is a subjective discussion, huh? Because normally how long-term investor think is that I am putting money for long growth, and it will ride itself, which is not a bad thing. But when we talk that I have only 20 stock and nothing is fixed in this world at the moment, what happened 1 year ago is not a guarantee it will again happen this year, because of technological changes happening every year. So this is not a good thing to say that we will stick to something. We'll get into something when we think is the right moment. Example, Amara Raja battery, and this is on my list from a long time. See, and we will like to close the meeting in some moment. Yeah.
Mhm.
um this is Amaraja, I think so. Yeah, see here. Fair enough. See, the way it went from 1 to 1.6 is exceptional, right? But it then falls down. So even if we bought something and we exit somewhere, it's fine. We will re-enter when it will cross 1.6. You know what I'm saying? Or it will when it will go above 1. It's fine. Also, I actually make some research with ChatGPT with EV market in India, like what could be possible future, and I get to know that EV market is about 7.3 billion as of today, and by 2030 the projected will be 150 to 200 billion dollar. So the opportunity for that batteries in EV, only in EV itself, is about 30 times. So the opportunity is 30 times. Okay. Now, whichever shares of Amaraja currently have in uh, in uh, in the current ecosystem, if the sector itself is growing by 30 times, Amaraja should also grow by 30 times, and if it is a leader, then it should grow by 30 to 50 times. This is a high level overview of what can happen. So we are talking about a growth industry where this can really can happen. So even a bad, so if you see the industry leader mostly are Amaraja Battery and Exide, and in both the chart, yeah, we see this is happening. So what I think, and I put this note on top of it so that whenever I come here, I will be able to understand. And through ChatGPT, I try to understand if the growth also will go the same way, if the industry also will grow by 30 times, what will be the price? And I get to know that even though the company is at about 400, with the change in whole structure, this can go between 2,800 to 4,200. Now, this will take time, 10 years, maybe 15 years, maybe. But the growth opportunity from here is about 10 times, 8 to 10 times, right? 6 to 10 times. So this is a big opportunity. Then I try to look for the news around. So I get to know that Exide actually make a contract with Hyundai make a contract for his EV car with Exide, saying that all Hyundai car will going to get Exide EV batteries. It's a big news, right? It's a big news. So yeah, so there's a section here which actually will tell us, but I think the news is over, so we don't see it. So I can search here, Exide with Hyundai EV See, this is new, right? Excite team up with Hyundai for Accelerate EV. So this is a well-known news already announced. It's also part of the global news. So I think there's also a section here to see something like. mm,
And even Amar Raja, they are opening this one, the Giga factory
Really?
recently.
Okay. Okay. So normally this is also one of the way, huh? I mean, I will say Excite news for EV India. I mean, as simple as this, right? And then you're going to get that, okay, what's happening? So Excite is going to put a lot of money so you can get all those news here. You don't have to rely on everything, but mostly the news-based articles sometimes help because see, Hyundai target over 50% EV share. It's a 5 days old news. So these things are important that we get something big out of it. Even Vijay Kedia has some opinion to it. I don't know what is it doing, but point is that um, if we find an industry or a sector which has a growth opportunity, and if we decide to one of the top player to stick with it, and then follow the Fibonacci way of investing, then we can make money, right? And the chances of growth is really, really big. So if I make something like this, see, this is pretty cool, right? CXide, this is cool. Now from
Yeah,
two,
I'm already excited in this. Yeah.
yeah, so it fall down from 2.6. See, this is the point. So if it's falling down, it will fall down to a point. How much? Maybe till to 305. Example, okay? So if it comes till 305 and it try to make a support base and then it goes up, then we should be interested to know more about it. Like, is it a good moment to enter or not? But if you ask me, I don't think it will come to 305. I think this is the base. And why I'm telling you? Because I have another theory on top of Fibonacci. What is that? Take something from here to here. Okay, not only, yeah, so the moment it started going up till the top, so now you will get able to see how much the stock has corrected. So now the stock has corrected zero point 0.5 of Fibonacci series. I have a strong belief that any stock which will go up should not correct more than 61%. So if there's a moment of buying for me, I should buy here, and when it comes to 61%, I should buy more. Okay, and then it should make a base here and then it should go up, then I should again buy third time, and then we should buy again when it will cross 1. You know what I'm saying? Because that moment we will then going to make a line from here to here, and then we'll say this will go up. So I'm still in the progress of deciding how we are going to make the chunks. If this structure what I'm talking about is good enough, trustable enough, even though if you find a company, and will it also tell us when to exit? So this require a lot of effort to enter and exit. But I think if we like to make good money, then this much effort we have to do it, because there is no cakewalk even in future. And whenever a big change is coming to an industry, most of the time the stock before the big event will fall down, so that those who are already onboarded will leave it, and then the valuation will be cheaper, and then company will going to re-enter. Those people who are going to re-enter who would like to ride it for a longer term. So if you ask me, like Excite, my visibility is something like here to here. Okay, and then I'm saying I'm not here for 2.6. I'm here till maybe 4.2 or something. So even from here today, 380 is the price, and I'm talking about 1,000 rupees. So it is about 3 times even from here, right? 2.5 times. So even if I buy today with an assumption of that it will go to 1,000 at some day, it's cheaper for me. So it is just an opinion and just a view to look into the problem, that okay, it can again play around for 6 months, but eventually it will go here. So that's also a way to look to a problem. Any question? Anything?
If we put this in 30 or 20, I think it's more actually. So let's take 20 and take 20
Hmm.
stocks. If you sell at, consider that we guess that it will go to 1000 or 900 or 1000, and again sell it as 1000,
Hmm.
we might miss the bigger opportunity, right? In case if you sell at that point.
Yeah, true. Um, true. No, you are absolutely right. That's what I was keep saying, that there is no way to say um, what is the best time to enter or what is the best time to exit. And that's why on the day one itself, we have decided what is the percentage growth we're looking for.
These kind of stocks, I think we can keep long term itself, like 5 years or 10 years or something. If we think that
Yeah, yeah,
it consider batteries, the lithium ion batteries are one way we can do fundamental analysis as well, because getting up to date with the latest news actually. This is really interesting sector. We should keep follow up.
exactly.
Mostly, the more money flowing from oil to electricity now.
Yeah,
Slowly, slowly, it will not be, I mean, it's very early, but slowly consider like 3 or 4 years or by 2030,
hmm,
number of gigawatts. Recently, I have seen that article. How many gigawatts India? There is a target, right? 450 gigawatts by 2030.
yeah,
Energy,
yeah,
renewable energy. I think we might exceed it.
yeah,
Fine, we
yeah,
might exceed the 450 gigawatts by 2030.
yeah,
So, see, oil usage might not decrease suddenly, because they are telling, right, the peaks we will be seeing around 2030 to 35 around. The peak of oil usage, not sure how much it will be, but the thing is, the power generation, at least it is slowly moving towards these renewable sources.
yeah,
And vehicles, they are using more power. This electricity,
yeah,
EVs. I mean the EVs. So in addition to the batteries, we can take a look at the power generation, distribution,
yeah,
and transmission. There are three streams, right, in the
yeah,
power.
yeah,
So we have to have a look dedicated slot for the EV actually. We
yeah,
should have that
yeah,
dedicated slot in our discussions.
yeah,
So maybe if we think that okay, except batteries is fitting towards like 5 to 10 years, then we will not make this one into the 20 list. Let's have it in the portfolio. Whenever based on the graph, add it more, make it average, let it grow.
yeah, exactly, exactly.
Yeah. But whichever you think that you said that the technology is changing faster, and if we set particular stock into that segment,
Hmm.
we will push into the 20 list of 20, so that you can buy whenever you need, you can sell whenever you need it.
Yeah,
You will not keep it for the long term, right?
yeah, uh, exactly. I do believe that power sector, mostly for power generations wise, is a good opportunity place. And as part of that, also EV industry also will grow. But the valuation is very high. I mean, see, I mean to say that only small companies in power sectors maybe are something that we can bid on, because other than that, if you see company like Tata Power, okay, I'm just giving an example. These,
Valuations are decreasing.
yeah, it is decreasing, but it is not decreasing as much that I was expecting. And okay, what I'm going to say here is that the opportunity is there, but most of it is already in the price. So the market has already discounted the higher possibility of it of past future. And if you see here, Tata Motor, which is one of the leader of the industry for this, it's already, I mean, there's a moment, okay, in past when it was for 39 rupees. Now it is at 370, which means that it has already gone 10 times up. Am I right? Now
Mhm.
the price, okay, the earning was about 3, now it is 12. It is 4 times. So the price has increased 10 times, the earning has increased 4 times, and because of it, the PE has also increased. Even in this market, when things are falling, if you see, the PE almost is not so much decreased as I was expecting. And here also, if you see, it was about 60 to 17 it comes. And the reason here was also a bit weird because the price was going down and the price was going up. So the earning was going up. So that's the reason the P has come down. But now, if the price is coming down, I have a belief that the EPS will not increase very soon. So the price will be here. Okay. And even if you see PE wise, it is also here. So I'm only interested in power sector if it actually comes below 280. And why I'm saying this all because if you see the growth wise, right? Um, yeah, weekly is better. If you see the growth wise, these are already the stocks which has performed in past. There is a very less chance that those opportunities which has already been part of bull run, previous bull run, will again be part of next bull run. There's a possibility, always a possibility, but it is not normally happens. And if you see last time, Fibonacci here, I never put it. Let's put it. Um, see, okay, let me make it bigger. Yeah. So
But fundamentals are
fundamentals are fine, but yeah, but just see this one. It already has make the game up. It already has touched 3.6. If I would bit more leverage to this, it
okay.
it already has done what it has to done. So until it really do not make another low, I will not going to get another level that I can make a line. What I keep saying here is that either Tata Motor make a time-based correction or make a price-based correction, then only I personally will like to enter. Okay. And the problem with this kind of sector is that since everybody knows the growth is high, everybody will going to enter now or maybe in past 2 years. So maybe the price should be about like from 70, it should be maybe 200, but it actually went to 500 because of overhype situation. So the real opportunity will be about 250. So how and when I should enter? My plan is I will enter to this company with all the logics in place at 250, because if I project in future that the price will be 5,000, so I will be going to make 20 times if I bought it around 250. But if I bought it around 400 or 500, example, then I'm going to make only 10 times. So the chances of growth is double for me if I wait, and if I actually, yeah. Yeah, it is more like I'm not here only to buy opportunities, but to buy opportunities which are cheap, and not cheap, I would say, good valuation wise, because it help you save your money for longer run. I mean, just think this one, okay? 2003 to 2011. I don't know what happened, but let's try to make some chart on top of it. I just to help you, okay? What would have happened? What would have happened that moment? See here. So 1 to 1.6 happen, comes down, tries, comes down, goes up. 1.6, 2.6, easy. 2.6, 3.6, easy. But it doesn't stop. It goes up, goes up, goes up, and then it reaches to a level when it actually blasted because it cannot really sustain this growth or this price up. And then from 2008, it took about 11, 13 years to cross that level. You know what I'm saying? Even though the story was there, for some of the reason this has happened, so it is not a small amount. 21 to 161 is 8 times, right? So 8 times growth happened, but then the slowdown was for 13 years. So what I'm expecting here, this goes up, this comes down till here, it makes support and then it goes up. So when it makes support, it goes up, then I will enter.
Mm.
Because whatever theory in the world exists, you need to make money to say you make money, right? Things will be there, no problem. But or if it goes up from here, it actually will going to increase the risk, I would say, because it's already at 3.6, right? So as per our theory, it can go about, I mean, I'm in only till 42%, 4.2%. So from 370 to 584 is maybe 50% from here, about 50%. Yeah, 58%. So for 50%, I would not like to take a risk in this kind of chart. Um, there's more company, PNB. Just another view of the problem that we are discussing today. And let's see the fundamentals along. Okay. Now, the EPS was negative because of Malia, then it became positive, and now it is growing up, right? So the price also was somewhere 30 rupees, which has now is 100. So the EPS is now growing. Okay, first thing. Second, this company was following a downtrend for a long, long time. And I actually written it here. It can be part of next bull run because this company now has started showing the growth. And these companies like PNB or like other companies, Bandhan Bank, all those things, not Bandhan Bank, sorry, PNB and other government banks, they actually can be like SBI. So if today, I'm just telling one example, it is at 7 PE. Okay, you know what is SBI PE would be? In this example, this is nothing to be compared against. Okay, even SBI is at 9. Okay, so it is already elevated, but it is actually making a lot of money. So we cannot really say that. Okay, let's come back to PNB. PE wise, both are same. So what I expect is that SDFC Bank or Kotak Bank, whatever their PE is, these bank also will going to get that PE sometime in future. So if I say here, this is a big opportunity because there's nothing wrong in this bank now. Okay, everything is fine and the prices is also fine. Even the growth is also possible that the bank is going to go. So if you see here, it is now going from bottom to top, it make a base and now it is crossing 0.23. So this theory I'm still trying to make, like how it's going to make a base. I have a theory that whenever you make a base, it plays around 0.23% and then it goes up. That means that it's not going to break that low. It's not going to break 23 rupees. That's a theory, okay? Just a theory. Because I have seen in some of the example that it does not really cross it. For example, this is my low, okay? Assuming this is my low. So it goes up and it crosses 0.23. So this is wrong. This is not my low. This is my low. And I get to know, okay, it broke my 2.3. So this is not the low. So this is a way to say how my base is formed. This is a better way to say half circle. This is how a base is usually formed. Okay. If tomorrow it falls from here to here, then again I will say this is not my low. The low will be more far below in future, which is fine. So assuming today, if this is the low, what is the opportunity growth I have? The price is about 100. Okay. Let's stick to only the facts. I will be getting opportunities from 278. So 100 to 278 itself is 2.7 times. And from there on till 360 to 900. So 9 times opportunity exists. Am I right? Assuming if theory is right, what you talk about Excite 10 times growth, I'm telling you the same growth here 10 times. Okay, I mean, it may not happen, but I'm saying if it happened, then their 10 times growth also exists in this kind of chart. Now, and people are also not very much optimistic about this chart. So this is a possibility that this can happen. And just see this chart. I will show you one more chart. Okay, just trying to show you something. See, See, see from here to here. Do you see something similar? Tesla chart. So normally these kind of chart are also like this. So if I say from here to here, okay, this make low, this goes up, then it goes play around, and then it goes up. So the amount of money that can be made in this kind of chart is much higher than those overhyped stories. And I would like to also focus on these kind of stories where valuation are cheap, opportunity is about 10 times, because in the end we have to find 10 times. So we can also have Excite industry or something like that in the top 20, but never exclude something like PNB or even IOC, or not IOC. What is the other bank competitor of PNB? Bank of Baroda. Yeah, 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 exactly. Because these two banks actually have shown a similar pattern. I will show you. Yeah. See, it make a base, it goes up. Now it is above one. I mean, Bank of Baroda is doing even better than PNB, I would say. But if you see this, right? See here, this is how we expect it to grow. And believe me, these kind of thing, even if it goes from 200 to 1000, right? People will not say much about it. They will not make a hype story behind it. They will say, ah, okay, it happened. But in Excite, people are more interested. So there are more players there inside. So they play better games. So it is easier to follow up this thing. You know what I'm saying? Okay. I think we covered a lot of point today. Um, what I would like to now do is that we come up with a proper approach, maybe with 5 to 10 stocks. Okay, so you see from your side which 5 stock you can bring up. But for the next meeting, let's bring up some 5 to 10 stock, and let's going to say why these 5 stocks are not, or why these 5 stocks are part of my future plan or to my watch list.
Okay.
And both we can decide together. We can decide together. But whatever we decide, we will just say, okay, now we're never going to discuss this 5 stock ever. I will show you something like Imami. I already have the list ready with me, but I think this is not good enough because I also need validation from your side. See, Imami healthcare company, yeah, also FMCG company, it is making a base around this level. The EPS is going up, the PE is going down, RO is keep increasing, no price change. So this is a good opportunity until debt is going down. So what is wrong in it? I mean, just I'm just asking. By seeing this, if profit is growing, if PE is going down, if return and the debt is in the right direction, then what is the problem? And if I put those things like Fibonacci here, which is fair enough, right? If I put this way, it has even not crossed one, it has come down and it is towards my level of blue line, which is where I believe it should take a bounce back. So from here, if it goes up, then the limit is from here till like it is now 600. So we can play the game till 2000, which is still 3 times. And even if you enter somewhere here like 684, it's still 3 times, right? So when fundamental is on your side, everything is perfect. Only thing is that we need a little push. And even if you see this chart, right, this is perfect. I mean, did you see that what I just shown you? See, from here to here, it make the 23% and it goes up. It is perfect. So these kind of companies, I am more interested. And when I see this kind of company, then next question that I ask to myself is, what are the other competitors of this industry? Because if this is good, then the competitors will be in better position. And if I say Imami is number 10 in its industry, I would like to also see the first 9, because maybe I will get better question in the first 9 if I get the opportunity. So debt analysis is also pending. That is also needed. So that we just don't see one destination, but we see and compare it against the peers. And that actually give us better choices. And I was doing that actually. And I got it also in Concur. I mean, I was doing those analysis and I found also this somewhere like, see here, price is going nowhere, EPS going up, PE going down, ROE is going up, debt is fine. And container corporation is like the theme of Adani, right? Ports and all. So this is India's one of the largest container corporation company, and yeah, good. What is bad in it? It is also near to the weekly level of 200, so it is fine. I mean, if you ask me, I would like to bet in this kind of company. The volume is also high, so these companies excite me more. Um and Lupin, how I forget Lupin. I think I already discussed Lupin in our last call. This is a case design that we must see. I mean, this is exactly what I'm looking for. Okay, see here, see here. This is exactly what we want, right? No, and this, I mean, even if you say that we like to play the game of 0.23%, itself is a good game because from 900 to 2000 is two times already. And even from now on, even if you believe if you're going to make some base, the moment it will start going above 2200 or 100, it's a line for us to buy it again. So Lupin actually has done what I was expecting. So what I'm expecting now, good companies to fall like Lupin, make a base like Lupin, double bottom, and then goes up. And my first chunk of money will goes around here. Okay. Second chunk of money goes around base of one. Third chunk of money will go somewhere between 1 to 3.6 based on the plan. And even if you see here, right, I will like to, yeah, we'll close this up now. If I say example weekly EPS, see here, even the EPS has been changed in the same moment. So when we were investing, we can also say that, okay, when should I invest more or when should I enter? I should enter when the negative become positive. So this is a good moment, although it again falls down, it's fine because it is trying to make double bottom. But again, when the EPS get positive, this is the moment to enter. So investing is not so tough if we try to find these stocks and look in this way. And I have a belief that this is a good approach. This is a better approach than simply selecting a stock and putting money into it and waiting to what happened.
Hmm.
Yeah,
Yeah.
you do have anything to ask or to discuss to share with me?
We are talking about the next year a bull market, right? So do we need to keep this much the threshold, like 20,000, like correction? So what is our plan, the main plan?
I believe that, okay, I think this,
Bull run, bear run. What is
yeah,
27,000? You showed 27,000. It might go up to 27,500 something as per our theory.
yeah. Um, okay, let's put that line again. Before that, I let me remove volume. So as per Corona correction, we already crossing 3.2. So this is already a correction for me. Until it does not cross 25,000, this is not something that I believe the correction is over. Okay. Second point is that if it falls down, as per this Fibonacci, it can come till 20,000, which is even the line says, right? So if it comes toward 20,000, then this could be a good buying zone for us. But it will be brutal if it happens. So let's think that this never happened. But if 2000 breaks, then the next level will be 19,500, and then for me the next level would be 15,000. So if we want to believe this theory, then let's not test 20,000. let's believe that it will come till 21,000, 22,000, and it revert back. So that we say that it has lived its life in 2.0, 3.6. It comes down till 21,000 somewhere, and now that is our new Fibonacci level, and then we will think from that level. Yeah. How about this point? If I take from here till here, 2022 high and low, then also if you see we are actually crossing 2.6 and we are unable to go to 3.6, and now we are breaking 2.6, it is bad, right? So if it breaks, then the next level is 20,700, 21,000, and if it then it breaks, then it is about 19,700 or 18,000. So there is a possibility that this can happen. Okay, there's a possibility, huge possibility. If you are asking me how to prepare, I am not going to take any action until it comes to 21,000. If it goes up from here, it's fine. So my point is 20 EMA. Okay, so in a bear run, remember one thing: the weekly 20 EMA. Whenever the price is not sustained above that price, then it is not bull anymore. So until the price is not crossing 24,200 and it's not sustaining above it, it is not a bull market. Whatever people says, let them say. If continuously the price is not above 20 EMA, then it is not a bull market. It's not a bull run. And we were one of those guys who actually predicted it in the right time. You know that, right? In December itself, we were able to say that this is going down. So this is a possibility that this will go more down. Until how much? Yeah, maybe 19,000, 18,000. So portfolio wise, there will be some loss, and I expect it to fall maybe between another 10% to 20%. And since we have small cap and mid cap, sometime micro cap in our portfolio, that will be more dangerous. So portfolio itself can go down by 30% or 35% if you have good stocks. If you only have a very, very bad stock, then even 50% downfall is possible, because mid cap, oops, I think I already have those things in my watch list. Yeah, mid cap. If you see this one, mid cap index, see here, mid cap already crossed 4.2. It's coming down. So it should come down if you ask me. And when it should, where it should come down, it should come at least till 2.6. And how much 2.6 from here? Um, about 25%. So 25% fall in mid cap is possible. Yeah. And how much at least it should fall? It should fall at least another 6%. So 6 to 25% in mid cap, something similar in a small cap is what I am expecting to happen. So that at some point it will going to make again a cup kind of half circle kind of pattern, and then it will go up. So that may take another few months. Also, if I mean, I have already started booking my profit into the stocks where I believe the hype is over, or at least the current bull excitement and people who are getting into it, those things are over, because I believe that the next bull run will be different, much more, not very much different, but it will be different. It should not be like how it started in 2020, because that is like everything works. In next bull run, not everything should not work. I mean, specific things would work. I will believe that. Yeah. Okay. Nice. Nice to have call again. And I think we will again come back later. We'll discuss again.
Yeah. Working great still. Done.